All right, let me kill the music. All right, good morning. It is 6:35 a.m., about 3 hours before the open of trading on Wall Street, and it's going to be a big week. Welcome to QuantBox Live, where we get our global macro on and uncover the best investment opportunities for the day, for the week, for the month, for the rest of the year. Very cool stuff. Yeah. Well, the first thing is you got to log in and get a quick overview of what's going on in all the different markets. Short, right? Here's the most recent prices. And then you want to look at a basket of goods. And then you want to look at market sentiment through the scatter plot of which combines long-term and short-term analyses. You want to see what you are most bullish on and most bearish on. You want to see how the stock markets have performed or the currency markets have performed around the world. I mean, you got to see this quick, quick, quick. Can't waste time. Okay, cool. Over the weekend, we had an update to the Commitment to Traders report. That's where you compare the stock and the flow of capital around the world. Yeah, it's kind of interesting, huh? Yeah, it's a great opportunity to see where institutional investors are. Speaking about institutional investors, how about central banks? What are they doing? What are they thinking? What is their analysis? What are they telling us the future is going to be like? Well, QuantBox displays that graphically. Of course, we just get tables and numbers. Kind of looks like a giant spreadsheet. The human mind likes colors better. So on and so forth. So you're combining economics with market sentiment, and you're doing it logically and intelligently, and you're doing it with facts, and you're organizing your thoughts so that you make, well, wise investment decisions, smart investment decisions, logical investment decisions. Yeah, that's what QuantBox is all about. Really, it's about confidence and letting your winners run because you know why you're in the trade. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. Yeah, one of the weaknesses of QuantBox, if you want to call it a weakness, is there's too much information. There's so much information. It's overwhelming. You're thinking too hard. Yeah, let it think. QuantBox just gives you the facts. So if the facts say nothing's going on, done. Because if you're trading with no intrinsic trend, you're taking risk that's unjustified. So be careful. Right now, yields are going up. Okay, I don't really like that, but I understand it. And the story behind that, of course, is the market sentiment. The market expected the Fed to cut interest rates 6 times this year. Oh boy, were they wrong. So this was 3.65, and then it was 3.75, and then 3.85, 3.95, and then 4.0. Now it's heading all the way kind of back because too many Fed cuts were priced in. And now we're like, it's gone from 6 to 5 cuts, now from 5 to 4 cuts. We have a Fed meeting this week. A lot of people think that the Fed will cut. I don't know. And so, anyways, what happens is as this goes up, that means those cuts that were priced in are being priced out. So it's not abnormal. It's just the market was quite wrong. And it's just kind of rebalancing. But we started this journey at 5. So we're waiting. So if they don't cut in January, they'll probably cut in March. That's what. So we're just now going, okay, maybe it's March. Okay. All right. So, okay, great. It's not going in the right direction, but it's understandable what's going on. Oil's up. We have geopolitical risk again. Okay. Okay. That's pushing things up. Or maybe it's seasonality. Who knows? There's all kinds of things going on. Iran may or may not have attacked Americans and killed 3 soldiers, but like 25 were wounded. You're like, those drones are really something, huh? I still think of what the kids got for Christmas a few years ago. These must be massive drones, like to hurt that many people. So that's, but there's, we're dropping the ball in the Ukraine. We got a war going, and now we've kind of abandoned them. Um, and there was an expert I was listening to that because the I don't know, the interview was basically like, we don't need to help the Ukraine fight the Russians because the Russians are broke, they're almost out of ammunition and soldiers, and they're like, well, Iran just sold an amazing amount of drones to the Russians for the war in the Ukraine, and the North Koreans sold Russia 1 million shells to drop on the Ukrainian soldiers. You're like, oh, all right, that war's not over. But anyway, so all of this adds to geopolitical tensions. Yeah, just 1 million shells. That's a lot of shells. Okay. Gold, you know what? Still just kind of putzing around 2000. Okay. S&P 500 not open yet. So we'll see if it's a risk on or risk off week. We have the Fed meeting. We have all this economic data. We have other central banks reporting. We have non-farm payrolls on Friday, ADP, weekly jobless claims. All of this is important, but don't forget, I think it's like 4 of the Magnificent Seven are reporting this week. Like, oy vey, that's a lot of volatility. Okay. Each one of those little pieces of the puzzle can push the S&P 500 up or down. Nothing's going on now because we're waiting. It's the calm before the storm. Euro dollar, I guess it didn't like sitting around 110. So here we are near 108. And Bitcoin trying to recover. Remember, it went from 49 to 39 and is now back to 42. So that's a lot going on. It looks like Euro Kiwi, pound Kiwi, Euro Aussie, pound Aussie. Okay. They're all bullish. Do you remember them being very bullish? Now they're only bullish. Yeah. Yeah. And then we have Kiwi dollar, Aussie Swissy, Aussie dollar, Kiwi Swissy. Okay, you see, it's the same thing kind of in reverse. Well, it is the same thing in reverse, but they've gone from very bearish, most of these, to simply bearish. So the scores have been less negative. Probably some profit taking, huh? Yep. And speaking about profit taking, you can see Japanese stock market's down today and FTSE's up. Good job. Good job. Huh? What? The sterling? Yeah. I listened to another interview over the weekend of this professional investor. I think she ran the endowment at Cambridge. What a fantastic accent she had. I can listen to her all day. Mm, yeah. Lovely. All right. So, anyways, she would say sterling. We'd have to hedge our sterling. And I'm like, oh, that's so fantastic. I, I said to myself, I need to say it more often. So here I am saying it. I'm going to say it a lot. Okay, let's load this puppy. And we've gone from mixed to, yeah, I wouldn't make a big deal out of this. A little bit of risk off. So typically in a risk off scenario, okay, you sell the S&P 500, you sell some gold, you sell some Kiwi, you sell some CAD, you sell some Euro, you sell some Aussie, but you buy the dollar, you buy the yen, you buy the Swissy. Yeah, that's just sort of typical. But it's barely, ever so barely, barely there. And of course, let's say you disagreed on the correlation. You're like, no, if it's risk off, I want to sell some gold. Like you just have to disagree ever so slightly with my opinion. And then this just goes back to mixed, so okay, but let's look at the facts. Over the last week, S&P 500 is up not even 1%. So a score of 0. Yields are up. Ooh, remember I showed you that earlier? Yields are up. We don't want up. So they're up for the week. That's negative. Yen is slightly up. It's neither here nor there because it's not even 1% for the week. Dixie's up 1/3% for the week. Neither here nor there. Gold is up ever neither here. And VIX is up. That's bad. Okay. And so, like, yeah, that's a lot of zeros, huh? But volatility up. It's telling you people are nervous. We're going into a big week. And we've gone from, I think, what almost every day for the last 2 weeks, it's been be cautious, be cautious, be cautious, be cautious. And now there's ever so slightly the warning flags of, I told you so. Okay. So you got to be careful. But, in an hour, this could just go back to risk off again. So pay attention. But notice no underlying interesting trend, and that is important. Okay, what's going on? Well, a lot of the markets are not quite open yet, but you may notice that there's a lot going on in this quadrant and a lot going on in that quadrant. And what that tells you is there's a negative slope. Okay, negative slope. That's not good. That's the slight risk off. Maybe it's because many of the markets are not quite open, not quite full trading yet. Could be. Still pretty early in the trading day. So be careful. Just looking for congruency. I see a yen, I see a yen, I see a yen. Neutral on this yen. Okay. Aussie, Kiwi, Aussie, Kiwi. Okay. So probably some profit taking. Aussie strong, Aussie strong. Yeah, yep, yep, yep. So probably some profit taking. That's how you want to look at this because everything with the bullish score, right? The positive score, they should be up here. So what you would want to do, the way you would use this on your charts is to say, go to your charts and see if you can technically describe why these pairs are down if they should be up. Is it just a pullback? Or did they hit target areas, right? And are they potentially reversals? Are these going to fall for 4 hours or 4 weeks? That's how you want to look at this and say, well, if it's just down for 4 hours, then probably in the next 4 to 12 hours, there might be a buying opportunity. But I can tell you, many of these were at logical targets. Last week, you should have been out. You should be the one pushing these down by selling your bullish positions. Okay. Or if you're not in them, again, you'd open the charts to see if later this week, will there be an opportunity to push these back up? That's your job technically. Let's see if we can get this organized. One day, one day, one day, 18 hours, 2 days. All right. Well, we'll start here. Well, there's just so much. Every day I'm hoping that the new sort of prototype calendar is released to us. Let's see. Under this version, it just won't. Yeah. Doesn't do it quite right. Well, the thing I want to focus on most, and we'll see if it'll do it. Let's just do dollar. It's going to be a big dollar's going to move it. We have other central banks reporting, but with the stock market so sensitive to the Fed meeting, I think that's going to control global risk, right? Risk on or risk off. Global markets are going to flow around the Fed meeting. And part of that is not even on this calendar, and that's those earnings. So we got the earnings, we have the Fed meeting, all that kind of stuff. So people are going to look at jolts. That's the number of job openings relative to a workforce. Okay. So the jolts were way too high, and we actually want them to be coming down, which is weird. Less companies advertising. Okay. Then obviously we got the Fed and the Fed decision. ADP before that, though. This is 2 in the afternoon. This is 8:15 in the morning. Initial jobless claims after the Fed meeting. Well, again, people are going to, normally use this to figure out if the Fed will be able to raise or cut. But by the time we get this information, we've already learned about this Fed meeting. But then I don't think they're going to cut. So here's the thing: then everyone's going to be using this information and maybe even the information before the Fed meeting about the March. I think it's all about March now. Well, we've been talking about March for 6 months. So, anyways, March is getting close. So all of this really is forward looking, but since ADP is coming out before the Fed meeting, that'll have you know, some extra oomph. We're expecting a lower number on that. All right, well, we'll find out. Okay. ISM manufacturing, probably not that big of a deal. We do want to look at unemployment rate. This is going to be a key one because it's different math and it's slower, right? It's a slower number. Like you can get headline non-farm payrolls bouncing all over the place, but unemployment doesn't change much. So the big news, I think, you know, is when, is this going to go from up? Is the unemployment rate going to increase? And that's going to dictate whether the Fed can go on the March meeting. And we obviously we have a couple more NFPs before that happens. Okay, you, Mitch. Okay, we just went over you, Mitch. We have another one. Boy, time must be flying. Uh, So, anyways, and then ISM services is also what? No, that's next week, isn't it? Yeah. Okay, and that's that. This one here is the big one. So that what is that? Monday or Tuesday? So this is sort of 164. So people are expecting less. Oh, that's the private side. Yeah. Yeah, that makes more sense. 216. I have some on Monday. Yeah, okay. So the headline is the jumpy one. This is probably the more interesting one. And QuantBox tells you what the Fed expects. So when you look at this, don't look at consensus, really. You want to look at the differentiation. So let's actually do this. So remember 3.8, 3.8, 3.8 for February. What does the Fed think? Uh, Wait. Oh, I'm on the. This is inflation. I'm thinking jobs. Uh, I have that coming. I'm not going to tell you about it, but anyway, sorry, my bad. My bad. Erase. Yeah, I was looking at unemployment, but I was thinking this page, but this page is inflation. But boy, wouldn't it be nice if we had a page like this for employment? I don't know. It'd be really nice. Who knows if it's even possible? All right, let's do our COT report. Must be a Monday. Happy Monday. For those that have subscribed to the AI alert service, I've manually sent you the report. Did you guys get it? Because it sent me an email and then I just copied and pasted and sent it to you. Yeah. Huh? Isn't it nice now you get it and you just what did it take you? 5 seconds? You're like, oh, I just read the whole entire COT report. Yeah. Andrew says, Treasury refunding announcement. Will the slowing pace of selling bonds? I'd have to look at it, but um, I mean, what do you mean? Like Treasury sells bonds to raise money. I don't think the government is slowing down. So you're talking about the rollover on there, but are you Treasury refunding? So like the Fed is in the process of quantitative tightening, but you're talking about Treasury. So, anyways, since I don't understand the question, I mean, I'd have to really think about it or read what you read. But yeah, but not sure. Treasury refunding announcement. Yeah, so I'm not sure. All right, let's organize our thoughts. Money has come out of silver and platinum. Money has come out of Swiss franc. Okay, turning these things are turning bearish. Money is into oil. Okay, oil's up. We know that it was 70, and now we're closer to 80. It was actually 68 and we're closer to 78. So it's up $10 over the last couple of weeks. So we know that money is definitely going in there. Yields have gone from 3.5 all the way to, we're basically are at 4.2, right? So you can see um, a change here. That's interesting. Long, so they're bullish, but wait. Let me think about this. It, the market is short. So that would push yields up, but some money came out of the shorts and went long. So that should push yields down. Yields are up, but still you can see very short. That's interesting. So yeah, so there was a move. You can see a 14% increase in bulls and a decrease in bears, but it's still very bearish, which means that that actually is the pressure. That's the pressure. Bearish pushes yields up. Bullish pushes yields down. What else? Look at it's when you look at the Japanese stock market, the market's very long, and you see like a 2% change, but really it's the relative difference. Either way, there's less bulls and less bears. That's very topish, huh? Everybody's getting out. Interesting. Still heavily bullish. Cat is 50-50, no clear direction. Kiwi is clearly no direction. Rand, people are definitely long, trying to catch that yield, but the flows are not clear. Let's go back the other way and just kind of look at some of the metals here. So money coming out of metals, huh? Is that right? 53,000, a little bit little less bulls and I mean actually more bears. See, 1,000 less bulls, but 7,000 more bears. Ooh, Yeah, that's pretty significant, actually, huh? Platinum, there's new bulls and new bears, and it's 50-50. So you probably want to be careful there. Silver's 60-40 long, but definitely something's going on there. And then Nazi, of course, let's look at our friend, the Nazi. Still, most people are long, and some capital flows went in, but people are getting short. People are getting short. So it's still money going into the longs. Okay. But percentage wise, look at the big change here. Yeah. So this new capital flow is 60-40 the other way, which is kind of interesting. So, boy, that kind of looks like maybe a top is forming, huh? Most things are not moving that much, really. When you're looking at all these, like the S&P 500, and people are nervous. Take a different look of what's happened week over week. This is just now price, right? Price action. The other one is capital stocks and capital flows. Um, Bitcoin is having a big recovery for the week, but it was way down. It was way down. So oil's had a big week. FTSE's trying to recover, which is great. This has been the dog with fleas for so long, huh? So a little bit of more money coming in there. Now, notice that some of the other things, maybe money is coming out of the S&P 500 and into FTSE. Yields are up, which is bad. Okay. But the stock markets are still up, generally speaking. But, 1% for the week. Dow flat for the week. NASDAQ essentially flat for the week, right? These are not big weeks, 0.5%. Well, NASDAQ can do that in an hour. So when you look at it from a weekly point of view, that's no big deal. So S&P, Dow, and DAX. Okay. What's the most bearish of these things? Japanese stock market's giving back 1.5%. Euro's weak against Swissy. Euro's weak against CAD. Euro's weak against Aussie. Okay. Euro was weak against yen. Euro was weak versus dollar. Hmm. Euro was weak even against the Kiwi, for crying out loud. Okay. Yeah. Many of the yen pairs are just kind of in the middle, slightly bullish, slightly bearish. So all just sort of neutral. But Euro got crushed, huh? Bad week for Euro. Yeah, these stock markets are, I wonder what's going to happen next, right? Mhm. Very important week. It's going to influence all this. So, really, when you look at this page, what you should notice the most, I'm trying to get this to scroll. Come on now. Um, Everything is becoming more neutral. Okay. Where QuantBox was looking at short term indicators, just think about it this way. Over the last 2 weeks, I think almost every day, QuantBox has been mixed across the board. I mean, literally, it tells you mixed, no intrinsic trend. Now, this page is looking at the things that create the underlying trend. QuantBox looks at the correlation of the underlying trends, but now this is looking at the underlying trend for every currency pair, right? And in those 2 weeks, the economic score of each currency pair has slowly been changing from the extreme back to neutral. So it's telling you on a slower measure, okay, that the market is becoming more neutral. So I think if you went back and looked at this like a couple of weeks ago, you probably had 5 assets that were very bearish or 5 assets that were very bullish on the other side. And then quite a few that were, reasonably bullish, reasonably bearish. And notice that there's only one very bullish and one very bearish, three or four, and everything is moving to the middle. Everything is becoming neutral. Well, that's a red flag. Once again, it would say now is probably not the time to deploy a lot of capital. You're trying to catch the trend, and right, and the trend now is probably closer to profit taking than entry. And now you're going to have to use technical analysis and maybe some of the seasonality tools to anticipate when these things are going to move from neutrality back up. Well, that's what you got to do. That's your job. That's right. Your job is to say, well, we call that alpha. What do you want to own? And why do you want to own it? You still have to answer those questions. Okay. It doesn't necessarily think for you, it helps you think. Still a lot of money, retail money shorting Swiss franc. Yeah. I have a clumsy old employment. I don't know. I'm playing around with ideas on how to do this better. This is one of the original sort of test pages, and I'd like something a little bit better than this, but let's see. And yeah, it doesn't even get us to the new data. All right. So, yeah, that's right. So this should be updated soon, I'm told. So let's go. Let's go to the charts. And remember, a lot of the trades that we've been on, we're at key prices. Like I guess we can just look at the Japanese stock market. And this is a resistance line, the annual resistance line. And it looks like the Japanese stock market respected that line. Okay. Generally, it's not a top unless this market wants to move sideways for quite some time. Okay. So if you're a trend trader, you would look at like uh two choices of buying. You could buy it off the moving average or you could buy it off this role reversal. Okay. And if you were concerned as a bull and you were on it, you were concerned that that's going to be a top for the year, that everything's going to change. Well, you'd need a change in global sentiment, but you'd need a change at the Bank of Japan. But that could happen. So if you were concerned about that, you could take some profit, right? But you'd think right now using technical analysis is if everything remains relatively the same, you could probably buy a dip and take it up. We're going to learn quite a bit this week in regards to risk on and risk off for the global stock markets, and it'll be the Fed meeting. Okay. I had this up earlier. That's why that's drawn that way to predicting a future higher high. We haven't got one yet, and you can see this is the Chinese stock market, and I cut that little pullback. Great. Now it's come up and it's moving sideways, but it hasn't really made the higher high. So in this case, you probably want to let the 21 push up the market, push it up to this level. Okay. And so this fast move that I caught, we had talked about in advance, and it had to do with Chinese stimulus plan. So now we're waiting for it to actually become real. And if so, if it gets implemented, maybe there's some new up. It is dangerous because if you go back in time, you can see based on my channel here, and let me refresh this a little bit. It's definitely has been in a downtrend. This Chinese stock market's definitely been bad. Like for example, today, you remember Evergrande, the Chinese real estate developer that is building more buildings than all the skyscrapers in Manhattan. Yeah, Hong Kong, they just got liquidated. They just lost Hong Kong. Houston, we just lost Hong Kong, right? Yeah, they just lost it. Tim's like 300B. Yeah, well, pretty soon that adds up to real money, huh? So yeah, they just lost all their properties in Hong Kong. Hong Kong is going to liquidate. So if you're looking for a skyscraper and you want to get a good deal, there's probably a couple of dozen places for you to choose in Hong Kong right now. I'm telling you, it's totally interesting. Yeah, Tim's on it, but as soon as they said it, I'm like, dude, yeah, I want to buy a place in Hong Kong. Hong Kong is a great place. Yeah, get me a skyscraper, a twofer. Yeah, during the 2008 financial crisis, there was a brand new neighborhood, a couple of miles down the road, but all brand new homes, big, beautiful gate and everything. Um, and they had a sign, 2 for 1. Yeah. Never seen that before. Yeah, seriously, big giant sign. A twofer. Yeah. Yeah, those days were wild. I saw an alert for a house about a half a mile from the house I lived in at the time, and some builder was suddenly ran into like liquidity problems. It happens to everybody. So he obviously had a lot of bank loans, and he was building these mansions, right? Truly a mansion. He was building all these mansions. He was building the whole neighborhood, incredible houses. And all of a sudden, one of them popped up on my radar, and he needed cash now. And imagine buying a mansion, brand new, no one's lived in it. Um, and it probably, I just imagine it was about 66% less than what it should sell for. And I'm like, snap, I gotta go see this. So I jumped in the car. It's a half a mile away. Jump in the car and zip over there. I'm like, boom. And the guy was there and he's like, no, it's sold. You're like, oh, no, dang it, it's sold. But yeah, yeah. So if you are in the market for a skyscraper, you're gonna get a deal. Yeah, you're gonna get a deal. Hong Kong. And by the way, just so you know, if you were able to go to Hong Kong and buy a skyscraper and you got it for pennies on the dollar, and let's say you sit on it for 10 years and the Chinese market comes back and you sell it and you make 400% on your money. In Hong Kong, it's tax free. Now, if you're an American and you made your money in Hong Kong and Hong Kong doesn't tax you, America's going to tax you. Yeah, because in Americans get taxed on all their global income, even if the local jurisdiction doesn't tax you. America's going to tax you. There's one other country that does that. Does anybody know the other country that you get taxed on global income? North Korea. Okay, let's go through a couple of interesting ones. We're still in the range. Uh, it's just so interesting because on the hourly basis, right? If you were in the day trading group yesterday, we noticed that it went from the top to the bottom, and now it's gone from the bottom to the top. So really, after the last 24 hours, nothing happened. 24 hours before that, nothing happened. 24 hours before that, nothing happened. Yeah, I think we call that a range where I come from. Be careful. Now, bears still sell here, but remember, bulls buy here after a higher high, higher low. I just noticed I forgot a plural. Bulls, bulls. Oops. Bulls. Oh, God, dang it. It's been one of those days, I'm telling you. Just one of those days. There we go. All right. So, anyways, definitely, and remember this whole period after this drop, right? If not this whole period, much of this period, um, is when QuantBox is like it's mixed. Now we were definitely selling Aussie, we were definitely selling Kiwi, and those things were in play for sure. And you see, I'm still short. Um, but the issue is, since then, the counteracting force is probably that Chinese stimulus package, right? That's part of this, holding it from falling. And so now I've been short, what, 3 weeks or something. And our original target was down here. Okay. This week we might find the Fed doesn't cut, and that could lead to dollar strength. And then we move, okay, to the downside. Now, I have a stop here so that if it comes up, I can take profit. The other way of managing this is keeping it here so that you can give it room to breathe, find out the Fed doesn't cut, and then the dollar strengthens this way. But now you got this tiny little profit logged in. So I might as well just put it all the way back because we could probably end up doing something like this now to offset the opportunity cost. I can move this lower to either here or here, depending where it cuts off, kicks off. So this trade plans just moves. Let's see if I can grab this. No. Oh, dang it. There we go. So we move to that top. Okay. Let me get rid of that. And then we extend this down like that. So if I'm going to remove a small profit, then I got to add it to the future. Remember, my goal in a lot of these trades is to stay in. And when you look at seasonality, maybe it doesn't. In fact, why don't we just do that to see maybe that was a dumb decision? Because I'm going from my mind, but we could do things like seasonality. Let's get some facts. Should I do that or not? I don't know. See, I'm going from what I think is my experience in my mind, but I could be wrong. Why don't we just look at the facts? So, in my mind, dollar strength, okay, for Aussie dollar. So, yeah, it looks a little on the bearish side, huh? So I could stay short until September. Now, the unusual part of all of this is we have an election cycle in the United States and we have a Fed. So the Fed could probably start, if they're going to cut, let's say they cut in June. Let's say they don't cut in March and they don't cut in January, but they do cut in June. So two cuts. At one point, the Fed actually told us three cuts. Remember that? But nobody wants to talk about it. So what if the first cut's June, this next cut September, and the third cut is December? Then this probably is the perfect chart. So I could risk the 50 pips of opportunity. Like I could take the 50 pips profit, or I can let this run until September. Enrique, it's we're not interested. You're talking about January, right? The January meeting when you say the Fed watch tool. I mean, why don't we do that? This is going to be a long quant box, huh? All right, well, I don't mind if you guys don't mind. Uh, Fed watch tool. I just don't think I'm going to post this to YouTube. That's all. It's too much for a YouTube. Too much. Okay. All right. So here's what I'm trying to say. This is what you're looking at, right? Irrelevant. You're looking at the wrong data. Nobody cares. We're already done. We were done that months ago. So what you should be on now is this meeting. May is generally a dead meeting. I know. And then June. So yeah, no, January is dead. Dead. We don't care. We played that up. So this is a live meeting and June is typically a live meeting. So the real question is if they are going to start a cycle in an election year, they want to be perceived as being independent from the political process. Yeah, Enrique, you're like, no, you thought I was talking about January. I don't care about January. Yeah, we're so beyond that. Yeah, but here's the thing there's two thoughts, really. The Fed has got to cut and be apolitical. So they have to be on some sort of regimen. It's sort of like, you're the CEO, you're a billionaire CEO of some company. You can't sell your own stock because it looks like you're dumping it and you're going to make the stock fall because you must know something that nobody else knows. Plus, it's actually illegal. It could be considered inside trading, right? So the way to do it if you're a billionaire CEO is you just sell 10,000 shares once a month. No matter what, you sell 10 every month you're selling 10,000 shares, right? Um, so you're on a regimented schedule. So there's two regimented schedules that I think the Fed could go on, and this is what this is what the market is also trying to figure out. The regimented schedule is they cut March, June, September, and December. Okay. March, June, September, December. That's four cuts. Now, the Fed told us three. So you could also then say, which one is that? June, September, December. Which one is it? Well, that's for you to decide. Okay. Cool. So you're really anticipating a change. So if you're going four, you're anticipating a change in the March summary of economic projections because the Fed has already told us three. Okay, what would make the change from three to four? That's what you need to look at QuantBox to decide. Is inflation really coming down that fast? is employment really coming down that fast? Does the Fed need to slash? The Fed has interest rates here and inflation's down here. Bigger that spread, the more likely the Fed needs to cut. But what if that spread all of a sudden started to narrow? Then there'd be less likely need for the Fed to cut. So that's what you're just trying to figure out right now. Okay. In the November meeting, the Council of Investment Advisors, my group that manages my money, we met and we're like, yeah, January's dead. It's priced in, it's wrong. Right. So we had the facts. And so now it's really like, it's always been March. And March is to me a giant maybe. I think a year ago I said June, maybe. But back then I think I was pricing in two, June and December. And skip the whole issue of the election, right? That kind of thing. But well, these things are fluid. So that's what these are the right questions that you should be asking with QuantBox. And so I look at it and like, well, if January is off the table, but then, like I was saying when we went through the calendar, the data we're starting to get now may indicate that in the March meeting they won't cut. That's what we care about now. And if they don't go this week and they can't go in March, then when? But that could take the air out of the balloon, out of the bubble. I won't call it a bubble. Okay. It could deflate some of the asset prices. Yeah. Cool. And therefore, if that occurred, my Aussie dollar short could run. It's been short for 3 weeks. I could be short for 3 months. And therefore, maybe that's my alpha. That's how I let my winners run. I have to have a little bit more information than the average Joe in the market. Okay. Now only I have 50 or 75 or whatever pips profit. I could take it, or I could just say, well, it's worth it because I think looking at the data, this down possibility for Aussie dollar, which is only natural. The unnatural thing is Aussie dollar up. So if then the discussion around the Fed cutting this year, that's the unusual economic, you know, how do you say impactor? The thing that impact economics is whether the Fed cuts or not. Well, if they don't cut in the next 6 months, then yeah, I should probably let this fall because it wants to fall anyways. It wants to fall anyways. Okay. And that's why I sold it way up here with the idea like I can be short. And then I also know the election cycle will also probably not give you liftoff until the middle of November. So I'd even shift this takeoff. I don't disagree with the takeoff. I just don't think it's going to happen till after the election, middle of November. Oh my God. So that even gives me another month I could be short. Oh, is that worth the opportunity cost or should I take my 50 pips? 50, right? 50 pips. No. So anyway, so that's why I adjusted my stop. Ooh, long meeting. So, you know what? Maybe I will post it on YouTube. Maybe I won't. We'll see. It's a busy morning. Hope you're doing good. I hope you're feeling good. I hope you reconnected with your family and your friends over the weekend and all that kind of stuff. I hope you review your chart and all that kind of stuff. It is going to be a busy and probably choppy week. There's going to be good and bad this week. Don't forget, you know, it's not just the Fed and the other central bank meetings. It's not just non-farm payrolls. We also have earnings on particular companies that are propping up the stock market anyways. Like the rumor mill can be impacting. The future outlook. Can Nvidia grow another 100%? Oh, it only grew 80%. Sell, 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 sell. Right? Like, whoa, it could happen. And then the geopolitical stuff. I mean, I guess we should show that one chart. Um, uh, geopolitical, we had been talking about oil, and I guess we got to go here. And when this was at $68, I gave a big speech about being in a window of opportunity. And I think we were down here, yeah, around 68, 69. And I gave a little speechy about being in a day 45 of a 90-day window in which oil could start going back up and not only get above 70 or 75 or 80, but all the way back to 100 and beyond. Good. That was part of that planning. And then I was able to buy a dip at some point. I don't remember why that particular one. Oh, the psych level. I wanted to show you again, setting up a psych level. So that little dipsy do, and it's a simple little day trade. But that's 75, and we hit monthly target. So this is a key moment in time for oil. Okay, it's either gonna do it again, or it's going to collapse. Let's say. Okay, it's getting heavy as we approach 80. So remember, we went from 68 to 78. That's $10. People are going to want to take some profit. This area here is the January projected high. The low here is the M2. So in the training course to Investor Bootcamp, this bottom predicts this top. We've hit it, we respected it. So if we're going to take new trades, you really should be basing it on this week's pivot, weekly pivots, but really February pivots too. And the big question now is 78 enough? Or are we on our way to 84, 85? Once again, that's your job. Geopolitical risk obviously moved this up. So as a beneficiary of that, you can see it was kind of doing okay. And then there was some concern. And then boom over the weekend. So Friday up, gap up. So I was way up here at $79. And now it's faded over the London session, Asian London session. We'll see if the New York boys buy it low and take it high. So, anyways, peace on earth. May the pips be with you. May our profits be above average. Cheers.